Hello. Welcome to Professor B's Financial Knowledge for College. My name is Sienna, and I am Professor B's teaching assistant. In today's lesson, we will introduce financial statement vocabulary. Understanding financial statements is essential for making informed business decisions, evaluating company performance, and achieving personal financial literacy. This lesson will provide you with a comprehensive overview of the key terms and concepts used in financial statements, such as balance sheets, income statements, and cash flow statements. By becoming familiar with this vocabulary, you'll be better equipped to interpret financial data, communicate effectively with financial professionals, and navigate the complexities of financial analysis with confidence. Let's dive in and start building a strong foundation in financial statement terminology.
Balance sheet. A balance sheet is a financial statement that reports a company's assets, liabilities, and shareholder equity at a specific point in time. Balance sheets provide a picture of what a company owns and what it owes. It provides insight into the company's liquidity and net worth. The income statement. The income statement shows the amount of revenue the company is generating, how much the expenses are to produce that revenue, the net income produced over that period, along with how much the company is paying in taxes. Cash flow statement. A cash flow statement is a financial statement that shows the cash inflows and outflows from operating, investing, and financing activities over a specified period of time. Asset. An asset is something that a company owns that has monetary value. Common assets that you will find on a balance sheet include items such as cash, accounts receivable, inventory, property, plant and equipment, as well as short-term investments. Liability. A liability is something that a company owes that has monetary value. Common liabilities that you will find on a balance sheet include items such as accounts payable, accrued expenses, taxes payable, and wages payable. Current assets. Current assets represent a business's cash and other assets that may be turned into cash within 1 year. Current assets can include short-term investments, inventory, and accounts receivable. Current liabilities. Current liabilities are all liabilities of the business that are due to be settled within 1 year. Common current liabilities include accounts payable, short-term loans, salaries payable, and income taxes payable. Working capital. Working capital is the capital of a business that is used in its day-to-day operations. It is calculated as the current assets minus the current liabilities. Accounts receivable. Accounts receivable are the money owed to a company by its customers for goods or services sold on credit. Accounts payable. Accounts payable are the money a company owes to its suppliers for goods or services purchased on credit. Inventory. Inventory is the raw materials, work-in-progress goods, and finished goods that a company holds for sale. Goodwill. Goodwill is an intangible asset that arises when a company acquires another business at a price higher than the fair value of its net identifiable assets. Depreciation. Depreciation is the reduction in the value of an asset, such as plant and equipment, over the passage of time, due in particular to wear and tear. Amortization. Amortization is the practice of spreading an intangible asset's cost over that asset's useful life. Intangible assets are non-physical assets that have values such as goodwill, patents, trademarks, and intellectual property. Revenue. Revenue is the value of all sales of goods and services recognized by a company in a period. Revenue forms the beginning of a company's income statement and is commonly referred to as the top line. Net income. Net income is the final amount of remaining income a company has after all expenses, including taxes and payroll, have been deducted. It is commonly referred to as the bottom line. Cost of goods sold. Cost of goods sold are expenses incurred in the production of any goods or services. It includes material cost, direct labor cost, and factory overhead that is directly proportional to revenue. Dividends. Dividends are the distribution of a percentage of a company's earnings paid to its shareholders. Dividends are generally paid quarterly. Retained earnings. Retained earnings are the cumulative net income that has been retained in the company rather than paid out as dividends. This is the end of this tutorial. I hope you found it helpful. I wish you all the best in your financial journey. Have a great day.